morning. It is Friday. The market is closed. It's Good Friday, March 29th. Just a quick podcast because inflation numbers came out. But I wanted to go over kind of the quarter and where we're at as far as the quarter goes. Here's the Qs. And 11%, 11.88% in the month. That's just, or I'm sorry, the quarter. That's just from the beginning of the year. If we pull this back a little and we pull the, the volume to the 2021 heights, and let's see where everybody's kind of holding on from then, you'll see significant, let's get rid of this one, remove this segment. You'll see a shelf right there. I mean, there's a shelf forming up here between 432 and 410. Not much on the Qs, not much volume at all. People haven't been buying necessarily there. They don't believe this bull market. So what happened today? Well, the Fed preferred inflation gauge subsides in line with consensus. It wasn't, oh my God, inflation's getting killed. Core over core, month over month, 2.8 year over year percent. Now, the bad part was that last month's year over year was revised up to 2.9. That's a bit of a sticky issue and not exactly sure what it's going to do to the markets. Again, it's Friday. You have a weekend of news to kind of digest. Likely means that the Fed's going to lower, in my mind, twice instead of 3 times. Maybe not in June. Last month, the market shrugged this off, completely shrugged this off. So maybe this is going to be nothing. You can read this article on Seeking Alpha. Just know, from my standpoint, we're in a bull market. So I don't think that the market is strong, that this is strong enough news to kill that bull rally. I think we continue to push forward. Personal opinion, Powell and the Fed may reduce early for political consideration, but I don't think the market is going to crash without a June rate cut. I don't think that the market is going to explode if we get a June rate cut. I think most of everything is priced in and it's earnings based. So you're going to have to take a look at which stocks you like, which stocks you don't, blah, blah, blah. But the preferred inflation, it came out. Again, the market's closed, so nothing. S&P delivers one of the best Q1s in 5 years, driven by rate cut bets and mega cap gains. It was mega cap gains. You want to take a look at what won? Let's take a look at the first quarter. Let's look at what actually performed. These are the spider sectors. There's 9 spider sectors, I believe, something like that. You can see XLE up 12.57%. This is year to date, so it's as of close yesterday. XLK, that's technology, 8.2%. Not huge. XLB, which is materials, 8.5%. XLI industrials, 10%. The 2 biggest winners, XLC communication at 12% and XLE at 12%. So you want exposure to the communications and the energy sector. And if you want to take a look at what's in those ETFs, go over to Seeking Alpha and you take a look at XLE. We can take a look at this and you look at the holdings tab. That's what's in this. This is how you basically look at, okay, in the first half of the year, what actually happened. You can see Exxon is 22% of this. If we go over, we look at Exxon, which is in the core portfolio, Exxon was down 0.12. You're at 116. I do think you get to 120. Now, the algorithm makes you 9%. Buying and holding this over 2 years makes you 39%. I use the algorithm to try and gauge, in December, I sold out of this at 108. Probably not the best decision. Here in January, where it was $97, this was a fantastic decision. Absolutely fantastic decision. This at 103, 104, I think that may have been where I got out. Somewhere in that neighborhood, but it was in December. I remember it was December, and I think it was this slide down here at 103, somewhere in that neighborhood. And then the bounce back up, and I said it's going to find resistance, blah, blah, blah. Algorithm got you in at 104, February 16th. You're in a current rally on this one, which has all of the confirmation that you need. Right now, this is for over 40 days. It's a 12% gain in something this big. Your second biggest is Chevron at 16%. This makes up, 38% of this? If you go and you look at XLC, communications, and we see what are the big ones of this, it's Meta. Meta's huge. Google. I mean, the two things of Google take up 24%. So if you take Google, that's the largest. Disney is 4%. All of these had a great first quarter. AT&T, not great. Netflix, fantastic. T-Mobile, fantastic. Everything, 23 basic things. So you go over to the spider sector, you say, okay, what worked? Well, what didn't work? Is there potential that these things come back? Real estate, down 1.32%. Probably not a bad bet on this one. XLRE. You guys know I bought ITB. Prologis, which is the number one in this one. This is a lot of commercial real estate. Not great. Simon Property Group, great first quarter. You look at Simon Property Group, as far as this one goes, let's look at the first quarter of Simon Property Group. We go back to, January 23rd. We go back to here. It was trading at about 141. So if you bought Simon Property Group, you're up 10% in the first quarter. So again, you want to take the spider sectors. Take a look at the holdings in these and see which companies worked, which companies didn't. There's a lot of research that you can do. But that's it. Catalyst watch for next week. We got a couple of things, a couple of big things. First one, we're going to look for deliveries from Tesla, NIO, XPEV, Rivian, Li Auto, Lucid Group, GM, Ford, Toyota. We got a bunch. There are a bunch. Tesla's in the spotlight. And here's an article on Tesla. This is huge. In my mind yesterday, I said TSLQ. I don't think the Tesla has a lot of bull run in it. I just don't. I think these deliveries come in light, but I also think that whether or not the deliveries come in light or strong, I think that's priced into the stock. I mean, I don't think that they come in super strong. I think TSLQ probably is the play. That one, with this MACD kind of up on the oscillator, looks like, here, when it got you in at 187 and it went all the way up to 205 here from February till March. I mean, that was a pretty good run for this stock. Then it dipped down. You're making lower lows and lower highs. So my guess is if we do get a good number out of this, maybe this run comes to 185 or so. But I don't think you've got 200 in this until full self-driving comes out. The Catalyst watch, this email, it is great. Tuesday, Fortinet holds a 4-day event. A 4-day event. That's cybersecurity. That probably is going to come out with some pretty good news for Fortinet and others. Shareholders of Juniper will vote on the $13.6 billion buyout from Hewlett-Packard. The big one next week, it's Wednesday. It's Disney's shareholder event. Activist Nelson Peltz and his Trian Group have nominated 2 director candidates, Peltz and former Disney chair Jay Peluso, while Blackwell's Capital has put up 3 among influential property advisor firms, Glass Lewis, blah, blah, blah. It's just a proxy fight. There's going to be a vote. You'll find out exactly what happens for it. I don't think, personally, I think whether Peltz wins this, whether Bob Iger wins this, I think it's good for the stock. We take a look at a weekly of this one, and you're just coming up to your 200-day. I think 126 is probably your next resistance level. I don't think you get past that. I think it's a $153 stock at some point in time this year. I think they extract some value out of this. Now, my algorithm, 4-hour algorithm, makes you 25% over 24 months, 31 positions. You got to buy in here at 90. Did you buy it at 90? I certainly didn't. My average purchase price, though, is around 95, I think. So I'm in this one. This 75 days, 37%. 37% in that quality of a name. So you've got all this. I'm not going to do any scans today. I'll be back on Monday. I did want to get on, just kind of show you guys this. Understand the Easter sale for Trendspider is on $639 for the year. That's 5 payments on the monthly payment. The monthly is $149. That's the spring sale, the Easter sale. It's limited time, 2 more days. It goes up to $1,100 after this. This is a 64% discount. Do not wait on this one. You get my 4-hour algorithm. You get all my watch lists. You get my scanners. You get everything that you need to have to understand charting and to get a leg up on this market. If you wait on the sale, then you're really just putting your capital at risk, in my mind. I've gone over this week how I use Trendspider. It is just the best tool out there. Now, if you don't want Trendspider and you want more of a fundamental thing, I've shown you articles here. Seeking Alpha Premium. It is on sale. 7-day free trial for new users. It's $179. I believe, 25% off your membership. You go to my link tree. You can get all these links. If you are absolutely new, there is a new alpha pick coming out on Monday. 2 data-driven stocks every month. Alerts you when to sell, when picks are added, gives you the complete list, gives you a great analysis of every pick as well. The performance is where this is. For $449, if you put in enough money and you're getting 133% versus the S&P up 36%, nobody's going to sneeze at 36%. That's fantastic. But if you're up 133%, you're basically buying a round at the bar. That's what you're doing. You know, you're buying around for your buddy. You're saying, oh, I'm sorry, you made 36%. I made 133%. You're throwing it in their face. That's what you're doing. If you have any questions, hit me up. All of the social media is here. Have a great Easter. Enjoy your Good Friday. Thanks. Take care.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.